And we are live for FOMC. Legends, can you guys hear me? Please confirm in the comment section down below. I got a new mic, so hopefully it doesn't chop. Legends, how is everyone doing? Why say 5:40 if you're only going to be here at 6? I am actually packing for a trip, and I kept on moving the time forward a little bit. So, Bitcoin. What do you notice, legends? Can anyone point out what we're seeing here after Bitcoin swept the tariff capitulation lows? We have FOMC. And what a perfect time to get a rejection. Couldn't have been timed any more perfectly. Only wait for the dump to come soon. Only waiting for the dump to come soon. Look, this is already a pretty significant dump. But as you know, if you've been watching the channel for quite some time, I've been pretty vocal about the fact that I think Bitcoin is going to go sub 60K. Now, some of you don't like that. I can understand, but that's just the reality of it. I've been pretty, how do I say this? I've been pretty vocal about it, and I've kind of stayed firm on my stance of Bitcoin going lower, even with this bear market rally. So the important thing to consider here is right now, Bitcoin swept these tariff capitulation lows. If you've been watching the channel, since Bitcoin was right around here, literally the low 60K zone, I came out and I said that I would be adding to my existing Bitcoin short position if and only if we sweep the tariff capitulation lows. I couldn't have made myself any clearer on that note. We swept the lows. Yeah, we went a little bit higher afterwards because I entered right around here. But ultimately, right now, we're trying to hold the value area high, but it looks like we're getting rejected. Rejection. I think the stock market will likely have a pretty tough year ahead. We talked about this as well at length, but losing the bull market support band is not what you want to see for stocks. It's very difficult to call stock market tops, but at this point in time, this looks pretty damn similar to what happened when we dumped into this whole tariff nonsense. This is when that occurred. So I wouldn't be surprised if stocks dump a little bit further, and naturally that rolls over into Bitcoin, even though lately Bitcoin got another bear market relief rally. So let's take a look at FOMC. So here's the thing. I'm waiting to see where they're going to stream this. If one of you legends want to comment where they're going to be streaming FOMC, obviously we're taking a look at the price action. The rate cut decision, but you can see here that something's wrong with the time zone. I believe it's going to go in the next 30 minutes or so. Hala from Dubai. Oh, legends, before we continue any further in the live stream, please remember that nothing that I discuss within the live stream, within my content, within my community is financial advice. Nothing should be construed as financial advice. I'm essentially just a guy on the internet taking you through all of my own personal trades and my overall market analysis. Ultimately, you make your own decisions with your capital. I'm just sharing what I am personally doing. I got a lot of people reaching out saying, man, we're definitely going to pump to $80,000. But this was the same thing that happened when Bitcoin pumped all the way up to $97,000. So if we just zoom out here, if you've been tuning into the content for quite some time, I discussed the fact that I went short on Bitcoin here. I have the receipts in my videos if you want to go in and check that out. But I was very vocal about shorting right around this level as everyone was calling for back above $100,000 in Bitcoin. Now we're seeing a very, very similar thing play out here. And if Bitcoin continues to accept below its value area high, this yellow line that you see on the chart, I'll zoom in, then it does signal to me that we are already ready to move lower and have our 60K target met. Now, it won't go down in a straight line. It never does. Maybe there's another sweep of the highs. But ultimately, my base case has been the same, and I think what we're seeing is just another bear market relief rally. And I will continue to trade the market as such. So you can see here my average entry for my Bitcoin short is currently sitting at around $80,000, which is quite significant considering it was 97K. So I added a good amount to my position when we swept the tariff capitulation lows. This is going to be one of my best trades. That's what I'm... Jacob, I know you. Even when I was bullish, I recall that you were commenting very, very bearish things. I think that you might be a perma-bear, my friend. I do think that Bitcoin will be moving lower, but I don't think that we will, for example, see a 12K Bitcoin. I think that that is very, very, very unlikely. When it comes time to flip bullish, I will flip bullish. But from a higher time frame perspective, you can just see how this is playing out. My apologies, legends, if it's cutting out. Wi-Fi in my mom's basement is not the best. But as you know, I left Dubai to come and visit my family. So here I am. We'll have to make do with it. Hopefully it isn't too bad. Got a new mic, so I hope the mic sounds better. I also have a pop filter because when I pronounce the Bitcoin and things like that, it can really pop and hurt your ears. So hopefully that helps. Bear in the house, y'all. Short boss, best analysis ever. Thank you, thank you. Legends, where are the likes? 44 likes. Come on, legends. Smash that like button. Smash it. We're going to cover FOMC. We're going to look at the interest rate decision. We're going to see what Jerome Powell has to say. But you have to help me out and smash that like button. We want to get this content out to as many people as possible. So right now, this is taking a while to refresh. Okay, there we go. Thank you. Nailing shorts is what I do. Nailing shorts is what I do. So average entry is now $80,000. What else did I want to discuss before FOMC? Legends, where on earth is this getting streamed? Someone please comment where we can watch the FOMC together. There's a bunch of sources. A lot of people say that the YouTube channel for the Federal Reserve would be the best thing to watch, but I'm not seeing any scheduled live streams or anything like that. So I hope that they play it here. Hopefully price dumps from here. Let's see. You would think that the RSI on 4 hour and below would be a lot lower price right now. Still patient for me. I don't hear you. Maybe refresh. Okay. It's scheduled for 2:30 p.m. Eastern Standard Time. Oh, man, really? We're starting that late? That's devastating. I have to leave at some point, but we'll try our best to have that scheduled and in. I'll show you guys the FOMC, but I'll probably have to leave, I would say, around 3:15-ish. So we got, what, a solid hour and a half before then? That's crazy. I'm not sure what I'm going to talk about for an hour and a half. I wanted this to just be a chill live stream. But legends, let's go over some of the scenarios for Bitcoin. And one of those scenarios is the 8 daily green candles. Now, we covered this in my previous video, but I just thought I'd point it out what happened the last time this occurred in the bear market. And we essentially pumped up to the top of this resistance where we had those bullish candles. Everyone was very, very excited. 1, 2, 3, 4, 5, 6, 7, 8 green daily candles for Bitcoin. And look at the aftermath. Pretty horrible stuff. and we just absolutely tanked from there. I need answers, sir. Are you a relative of Ryan Rodney Reynolds? No, I'm not, but I've gotten that before. That's funny. So look, this is the price action. And the last time that this occurred in a bull market, so when we had already bottomed out, it essentially sent Bitcoin absolutely parabolic. But unfortunately for the bulls, I think that we're more in this scenario than this scenario. And so if we go on the daily time frame, you'll see exactly what I was discussing. So we managed to go to these tariff capitulation lows, very, very important level, as I've highlighted time and time again. 1, 2, 3, 4, 5, 6, 7, 8 green candles. And what comes after? Pretty big rejection. Now there is a case to be made that because we are dumping ahead of FOMC, maybe we find support and we can sweep the highs again. But as I've said time and time again on the channel, you want to start getting bearish when everyone is bullish, particularly in a bear market. My strategy in this bear market has always been to look for swing shorting opportunities. And the moment I enter those trades typically is when we're at a higher time frame inflection point. And that inflection point is the tariff capitulation low. Been eyeing this level for what seems like ever, right here when I was still already shorting Bitcoin, and then we added to the position. By the way, legends, if you want access to the trades that you're seeing here, all of the trades that I am personally taking in this market, please remember that you do have the first link in my description down below. If you DM me the keyword CBM on Telegram, you can join my private group where I share all of my own personal trades and how I am navigating this market. The only requirement is that you've signed up with one of the affiliate exchange links down below and you trade on there as you normally do. You're good to join the group. If you already have a Bluffin account, for example, I would just recommend that you essentially make a new one because there is a ridiculous promotion. Now, this promotion actually lets you withdraw up to $50,000 in bonuses. Yes, you heard that right, withdraw. So if this sounds interesting to you, go ahead and sign up with the second link in my description down below. Not only do you get these bonuses, but you also get access to my group where I share all of my own personal trades in this market. 40K loss in gold, help me. Oh man. Exit stream and re-enter should fix audio. Yep, correct. So let's see, let's have a chill live stream until FOMC. Seems like we have a lot of time, but like, I was really hoping that it was sooner. But look, this is a classic resistance support level that Bitcoin is currently at. So you can see here that this coincides with literally the all-time high of the previous cycle. Bitcoin pumped into this level, 2024, for several months. And so after that, we got a nice move to the upside after breaking above this huge resistance zone. Then when we had the tariff event with Trump, we dumped into it, confirmed it as support, and this was ultimately the springboard that allowed Bitcoin to make a brand new all-time high up to $126,000. I try to keep TA extremely simple for you. If you're patient and you're not necessarily a day trader, these are the levels that you want to pay attention to. We got the reaction at these levels, and right now the only thing you can do is just trade the market that's right in front of you. This is a very important higher time frame level. If for whatever reason Bitcoin manages to hold this box as support and it doesn't act as resistance, then I do think that Bitcoin can go as high as $80,000, maybe even all the way up to the bull market support band, which is up to $85,000, $83,000 to $84,000. However, from a risk to reward perspective, I've been waiting for this level to short, and it was a mechanical short in terms of adding to my existing Bitcoin short position. All right, legends. So So maybe they're going to be, let's smash that like button again. Every time I go on this screen, Legends, we have to smash 128. Guys, you're doing a great job. You're doing a phenomenal job. Let's see if we can get this up to 500 likes today. I think it's possible with an FOMC live stream. It is not out of the question. So let's see what happens here. We're going to zoom into the lower time frames when FOMC comes around. But at this point in time, comfy in my positions. You can see here that on the 4-hour time frame, there's still a little bit of time here, but this is the level where you want to see the bulls start to hold if you would like to see another move towards the highs. If we don't get another move towards the highs and we start rejecting here, we're going to go much, much lower, in my opinion, of course. Dun, dun, dun. Let's go through some comments, Legends. By the way, can you hear the music? I'm playing different music, but it is quite quiet. So I don't mind turning it up a little bit if you Legends can't hear it. Moon traders, much love, much love. 70K seems like a good spot for a scalp long. Yep, it's possible. Soothing music. Okay, nice. Glad you Legends can hear the music. Look, at the end of the day, I don't care about whether we're in a bull or bear market from a trading perspective. The only thing the environment that we're in affects is my bias in terms of how big my positions are. So for example, when we're near the bear market lows, I will start looking for aggressive swing longs in the market. But because I still firmly believe that we are in a bear market, and this is just another relief rally, I'm looking for swing shorts in the market. And that has allowed me to operate in this market relatively stress-free. If you've been following me for a while, you know that I also took a couple of losses on some longs, some scalp longs, but ultimately my shorts have been paying me dividends compared to my longs. Much, much more aggressive with my shorts. And that is for sure, simply because we are in a bear market. So let's see. Let's see how price reacts here. We zoom in a bit. We're trying. Perhaps we're getting a little bit of a sweep here. Not so bad. Not so bad. We got a pretty nice move up from this pivot, just below the value area high. But only time will tell. I'll turn up the music just a little bit. Legends, I appreciate all of you. Thank you for tuning in. Thank you for watching the content. The channel has been doing, I have to say, pretty well considering the market conditions. Like, we're at 17,000 subscribers. Some of you have been around since I had 500 subscribers. I've definitely improved in terms of how I present the content and the information. That's part of the journey. But I have to share something with you. You know, everyone wants to make it seem like it's super easy to publish content every day. Legends, my first YouTube videos took me 8 hours to produce like an 8-minute video because I was so concerned about how I was speaking, fumbling my words. So it just took a lot of repetition, and now hopefully the content is better. It's pretty insane, but I just thought I'd share that with you. So it's been a long journey. I hope in the next bull market we can get to 100,000 subscribers. It would be absolutely amazing. Ultimately, I just want to have a positive impact on your trading journey. And the way I do this is by providing you with a level-headed analysis. Minus the titles on the thumbnails, which, as you know, are sensationalized, but that's for the algorithm. I hope that you can see past that after you're viewing the content. All right. So, looks like a pretty good rejection to me. The thing that is just, it almost feels like we live in a simulation. I mean, look at this. This is crazy if you ask me. Let's go on the daily time frame, we have this wedgy structure where like this is where we went short, but look at how the price action developed. So we had a big low. We did not manage to sweep that low for quite some time. And what you'll notice is right here, this is liquidity. Liquidity just continuing to get built up. 1, 2, 3, 4. Liquidity, 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 liquidity. Then we get that move to the upside, and then boom, all of this liquidity claimed, gone, low is claimed. What do you notice with today's price action? It looks eerily similar, legends. I mean, look, there's no guarantees. I'm not a fortune teller, but I just trade the market that's right in front of me. And because we're in a bear market, it just logically, you don't want to avoid these patterns. We got a pretty big low, a pretty big bounce from the low. And right now what we're seeing is not claiming these lows. So we came close, higher low, higher low. And maybe here we form another higher low, and then we go like that, and then we come back down. But ultimately, this is what I'm going for. So let's see how the price action develops. There is a chance that this could already be it. And I do think, you'll notice on this chart, that Bitcoin will find its way somewhere here, which could actually be sub $50,000. But don't quote me on that. Don't quote me on that, because as I've said, this zone is going to be good for accumulation, in my opinion, of course. That's what I'm going to be doing. And the lower we go, sub 60K, the more I accumulate. I've spoken about this concept before, but basically the idea is if you have a 100% cash position that is ready to be allocated for spot Bitcoin, you slowly add to the position as we head lower if you believe in the asset class in the long term, of course. I do believe in the asset class in the long term. If you've tuned into the channel over the past couple months, maybe you think I'm full of crap because I've been very, very bearish. But I think that what we'll see here is continuation to the downside after this kind of resolves itself. And this is going to be a great zone for spot. Maybe we even go sub 49K. Maybe we go all the way down to this potential pivot down here. But all I know is I deploy the lower we go because I am not a fortune teller. I don't know what the exact bottom for Bitcoin would be. All I can do is maintain my exposure to the asset class that I believe in, even though I may be shorting in the short term. Okay, FOMC in 38 minutes. That's much better. The trend is your friend. We are in a downtrend. Absolutely correct. The trend is your friend. We are in a downtrend. I want to make another observation. I know we talked about the bull market support band and how Bitcoin usually rejects from around this zone. However, if you take a look at the prior bear market, we did tap into the zone, moved lower, and then on this rally here, we came nowhere near the bull market support band until at a later date, which was like way down the line, several months down the line. So if you take a look at this price action, first time around, we essentially tapped into the bull market support band. And now I don't know if we're going to make it all the way up there. I think that this is starting to look pretty interesting. A weekly sweep of such a significant pivot level. I think the probabilities favor a move lower after this most recent rejection. But let's see. I'm just going to keep on remaining adaptive and trade the market that's right in front of me. And obviously, if stocks continue to do what they've been doing, good luck, Bitcoin. Tom White, do you think today's FOMC is likely going to be bullish or bearish? All we know is that the previous 6 out of 7 FOMCs were bearish. So what this means is we dropped at least a few percent the days after FOMC. Now, in a bull market, we did manage to pump afterwards, but most of the time they resorted in being bearish. So again, it's a small sample size, but the probabilities do favor that even if we get maybe another move up, a lot of local volatility, we can potentially move lower. And that's how I've been trading the markets. So let's see. Maybe we front ran it. Maybe we already dumped this morning before FOMC, and now we start pumping. What do you think of holding Bitcoin versus Ethereum in the next bull market? Yes, Gregor, oil, sorry, I'll address the other question, but oil is looking solid. And the reason why oil is looking solid is we're surging after the Israel strikes on Iran's largest gas plant. So Iran has actually started to announce that some Gulf energy sites are legitimate targets. So thankfully, I'm no longer in the Middle East at this point in time. I do plan to go back, but this is essentially why oil is spiking. And by the way, legends, you can trade oil on Bluffin. So they have oil, they have copper, gold, stock market, and all of the cryptocurrencies that you've become accustomed to trading. So if that sounds interesting and you want to trade on an exchange that has basically everything, my go-to exchange with ridiculous bonuses, you do have the second link in my description down below. Click this link. You can also earn up to $50,000 in withdrawable bonuses. Something else I wanted to bring to your attention is Russia's involvement. Aside from drone technology, they've been expanding its intel share with Iran. They're engaging in military cooperation with Iran, whatever that means, and they're trying to keep its closest Middle East partner in the fight. Russia is also providing satellite imagery to Iranian forces. So their influence on the war has been rapidly growing, not necessarily something you want to see. Why do you think hype is not dumping? Okay, this is something else we can touch on, but this is going to be one of my high conviction altcoins for next cycle. I do ultimately think that we're going to head lower, but they also just announced that the first tokenized version of the Dow Jones, I believe, on Hyperliquid. So this is another reason why they just seem to continue to pump irrespective of the most recent price action. Guys, they are backed by real revenue. So I wouldn't be FOMOing this. I do think there's going to be pullbacks, but for an actual solid altcoin, and if you've been watching the channel for a while, you know that I have been very bearish on altcoins as a whole. This is one that I would keep my eyes on as we head into those bear market lows. Anything, sub 20, if we can even get it on hype, for me is pretty damn attractive. So you heard it here first. I think that this one is going to be an outperformer, particularly in the next cycle. And this kind of relative strength is, in my opinion, a preview of what's to come in the next bull market. There you go. I answered your question, Daniel Duran. Okay, so someone asked also about Ethereum versus Bitcoin. Legends, I spoke about this when I was on the Altcoin Daily channel, when I did an interview with them. And it seems to be a foreign concept holding Bitcoin as the majority of your spot portfolio. It's absolutely ridiculous to me that people have forgot this. This is like Crypto 101. Most of your portfolio, not financial advice of course, should be in Bitcoin. That's how you manage to get the upside of the crypto market and minimize your downside risk. If you want to take 10, 20% of your portfolio and speculate on alts, sure, do it. That's fine. However, Bitcoin determines the rest of the crypto market. And if Bitcoin goes down, especially with the previous cycle, the current monetary policy conditions, alts tend to move lower. and much, much lower, more aggressively. So just something for you to keep your eyes on and understand. It really depends on the capital that you're using. Like, obviously, it's much more difficult to make this generational wealth with Bitcoin, but it's nice to see your money steadily grow over time when you accumulate near the bear market lows. So that's what I do, at least with my capital. I will speculate on some alts, but most of my portfolio will be Bitcoin. No, I don't stake my ETH. I'd rather just put it in cold storage. I know that there's tons of benefits to that, earning yield, but I'm content with just keeping my assets in cold storage, especially if I'm not actively trading them. Interesting here, funding is going positive. So people are trying to long this at the first sign of support, which is ultimately good for shorts. Yes, I do trade commodities sometimes. But the thing that you need to also understand is in my opinion, of course, you trade what you're good at. And while I have had success trading commodities, I've had a lot of success trading Bitcoin in the bull market, in the bear market. And so find a way to print, trade it. And if you get good at one asset class, there's no reason to really pivot that much. What do you think about some traders holding both long and shorts at the same time? Open longs at the bottom, then shorting the top. Jordan, excellent question. You're asking a guy that has done that himself. So I've done that several times, actually. I shorted here at 97K, and there's a few times here where I actually decided to go long for scalp longs. So you can be very aware of the trend, but you can still try to play the lower time frames. So for example, maybe let's assume that Bitcoin bottoms in the bear market, just throwing a number out there at like 50K. I could be holding on to my short from here down to 50K, but then if I do start seeing signs of bottoming, I can then go ahead and open up a swing long. Now, on the way down, it's important that you take profits from your positions, as I did right here. You can see that I secured just over 300K in profits on my most recent short. I do have 120K in unrealized profits because I've added to my existing position now. But the idea is you take profits on the way down, and then I usually move my stop to break even. And if you believe that the market is starting to pivot from a swing trading perspective, you can enter long and maintain your shorts. Or even if you just want to scalp, maybe it's for example, I'll just give you a quick example here. If Bitcoin is to go down to this point of control at $68,000, point of controls usually act as very, very important levels within a range because it's where we have the most amount of volume. So there is usually some kind of reaction there. So attempting a scalp long here while maintaining my Bitcoin short, if I'm available and I'm looking at the charts, is not a bad idea. But it's also understanding the overall trend. And if I still believe that the trend is down, I'm more aggressive and I size into bigger positions with my swing shorts. And you can still long take a couple scalps here and there. So I hope I've explained myself well. Nice demo account. It's not a demo account. Exactly, that is oil. What do you think about some traders holding? So like, are they gonna go on their YouTube channel? Or do I look elsewhere? What's that? What's that? Let's go, legends. There you go. There you go. So we'll cover that when the time comes. They started streaming. Perfect. Perfect, perfect, perfect. Hey, boss, how are you doing? Gerardo, man, you've been very bullish. I've been seeing your comments. I understand your perspective, but until proven otherwise, I'm sorry. I cannot say that this time is different. It's the same thing playing out in front of your eyes time and time again. Now, I know a lot of people want these like one-hit wonders, like, no, this time really is different. The decoupling. But just trade the market that's right in front of you. Of course, there's no guarantees, but history would suggest that. That's unfortunate. This mic should be better. Maybe I turn it up a bit. Hope that it's a little bit better. Are you short? Connection is shit. My apologies, legends. It's frustrating. Very frustrating. Yes, I am shorting. Reading some of your comments. Yes, I am indeed shorting. I added to my existing short right here. You can see the little arrow, but ultimately it was right at the tariff capitulation lows. I planned for this a while in advance. I talked about it on the channel. So, yeah, I am shorting. I am shorting, legends. Live stream is fine. Awesome. Awesome. Awesome, legends. Let's do a quick like recap. We moved up pretty... Oof! 200 likes, legends. Destroy that like button. I think we can get to 500 today. I really do. Thank you, legends, for all of your support. I really do appreciate it. Now let's see what kind of price action we get going into FOMC. So I think what I'm going to do is I will drag the FOMC press conference on here and have the Bitcoin chart in the background if I can manage to sort that out. Yes. So I don't personally trust Binance, to be honest. I prefer Bluffin. I trust them with my capital. I've been trading on there for years. The thing that I really like about Bluffin, to be perfectly honest with you guys, is I know the actual team. Like, I have met them, and that instills a level of confidence in using their platform that, you know, I can't really replicate with Binance or Coinbase even. I know they're institutional platforms, but I trust Bluffin more. By the way, legends, if you want, there's some great bonuses. Second link in the description down below if it interests you. And if you click this first link and you DM me the keyword CBM on Telegram, you'll be able to join my private group where I share all of my own personal trades, like how I added to my existing Bitcoin short position. Time to shill again. Yes, sir. Let's see. Yeah, that's unfortunate. That is unfortunate. But look, I would just recommend that you join on Bluffin or any of the other exchanges I have down below. Like, if you guys really want to join the group, which is, as I said, free because you're trading with your own capital, just sign up with one of the links down below. It's really not that difficult. And you just make that one of your main go-to platforms. Let's see. 5-minute bull flag. Yeah, also someone asked about VIP on Bluffin. If you're trading with 25K, I can get you VIP 1. If you're trading with 50K, I can get you VIP 2. And if you're trading with 100K plus, I can get you VIP 3. And then, of course, if you're trading with a few million, then just DM me on Telegram. There's a couple of you that actually are within my community, and I'm happy to help you all out. I'm too nervous to use a VPN. If, let's say, we get a bottom, 40 to 50K, where do you expect the next top to be? Any thoughts on buying Sol? It's so difficult, Legends. Like, I think the next top for Bitcoin probably below $200,000, if I'm just being real with you, because we're seeing diminishing returns, but also diminishing drawdowns. So, yeah, those are my thoughts. As it pertains to altcoins, we'll cross that bridge when we get there. But I've been so bearish on alts for so long that it almost feels wrong to start talking about them now, because I do think that they will be bleeding lower ultimately. If you weren't in a short, what level would you be looking at? Very good question. That I am happy to discuss. First and foremost, the level that I would be looking at is if we manage to fail holding above the value area high. Right now, we're above the level. If we get above this level and hold it as support, there is a case to be made that, hey, maybe Bitcoin can move and even sweep the highs. But losing this level could be a short trigger. Losing the local highs of the range could also be a short trigger, in my opinion, of course. So you can see that this is the local highs right at around 72.2. So if we manage to tap into this level and you see some kind of rejection, not a bad area as well. I'm happy we tapped into the tariff capitulation lows. There's a very, very pivotal level. And it was a mechanical execution from my side. Hey, Matt, are you in Canada? Yes, but I won't tell you where in Canada. It's a rounded bottom. If you disagree, you disagree. Legends, that's the beauty of living on planet Earth. We can disagree with each other. It's totally fine. For me, this C, Legends. Hola, when FOMC? FOMC is supposedly in the next 15 minutes. So we'll be playing it live on the channel. Legends, my short, my average entry is now down to $80,000. As we've discussed, I wanted to add to my position after taking some profits, and this was a good area to add, in my opinion. Not now. No, I actually didn't short 76. I shorted 97 and I shorted like 74 and a half. So we see how the price action develops. I have a pretty wide invalidation, I have to be honest. I do ultimately think the market moves lower. So that's that. Legends, if you want to know exactly which trades I'm taking, when I am taking them, you do have the first link in my description down below. DM me the keyword CBM on Telegram, and you'll be able to join my private group. A bot will essentially send you all the options. All you have to do is sign up with one of these exchanges. A solid one is also Velto, which is self-custody. Some of you like that, and I trust them for self-custody purposes. Solid platform to trade on. But let's see. Look, we're trying to hold the value area high here. You're high. Darian, okay, valid. Some of you have told me this before. Stop saying legends. So what could be the word that I call you guys? What could be the community name? I need to find a different name because I've gotten that feedback before. You guys don't like legends. I don't want to say you guys because there are some women in the audience, of course. So there has to be a different term I can use. Plebs. Dipshits. Some of you guys are hilarious. Hustlers. Brokies. I'm not gonna call you guys brokies. What is this? Give me some good options, please. Oh, you guys are funny. Unprofitables. No, I am profitable. And I hope that if I guide you with my content and within my community that you can make your own decisions in this market and ultimately thrive. Champs, degenerates, wannabes, gangsters, my people, lost prophets. Goofy goobers. I'm also going to get a better camera for at home. As you know, my quality is usually 2K, but it's not as crazy. Give me a break. Money makers. Bots. All right, legends, we're getting some form of volatility here. Let's just go on this chart. Chart surfers. Nice. All right. 12 minutes until FOMC. I am pretty used to legends. This is another reason why we had that initial dump right before we get into FOMC. So PPI inflation actually rose to 3.4%, which was above the expectations by a solid 0.5%. That's pretty significant. Core PPI rose to 3.9%, above the expectations of 3.7%, and it's at its highest since February of 2023. This data also does not include the Iran war. So the reason why this is significant is because, I mean, guys, 99% chance that we don't get rate cuts at this meeting. But also, if we go to the next FOMC meeting, 97% chance that we don't get rate cuts. So inflation is still sticky. It's something for us to consider. And if inflation remains sticky, it's not an environment where they can just easily cut rates. Then we have June. Again, 83% chance we don't have rate cuts. July, 70% chance. September, currently 60% chance. When are these rate cuts going to happen? Let me know. Let me know in the chat down below. Yes, that's a very good observation. Let's check it out. Let's check it out. What does that look like to you? The CME gap has officially been closed. Maybe we move up from here. But I'm shorting, just to be perfectly clear. I'm still giga short. Giga Chad. Then why don't you long? Because I am swing short. Guys, you have to understand that trading is all about probabilities. I think there's a lot of people that mess up trading or are unprofitable traders simply because they can't sit without having some kind of position in the market. It's a fine line. It's a fine line. So it's always important that you remember to protect your capital as well, particularly in bear markets, because imagine getting to the bear market bottoms and there's no capital available for you to purchase Bitcoin if you believe in the asset class long term. So not being in a position in the market and watching the price action play out is having a position in the market, if that makes sense. You don't need to force yourself to trade if you don't see any new opportunities. I'm asking you, I'm short. I'm short as well, man. Look, 80K average price added to my position at the tariff capitulation lows. I've been shorting since 97K. I'm swing shorting specifically because we are indeed in a bear market and price action favors a move to the downside, especially after we retrace to such a crucial higher time frame zone. Legends. We do the FOMC. Correct, Grigor. Your spot bag is also position. So the way that I try to play this is I always have some exposure to the market. So I do hold spot Bitcoin. That's why I tried to address it in my previous videos. Like what if this time really is different and Bitcoin just starts absolutely skyrocketing? Well, I hold some Bitcoin. I believe in the asset class long term. I really, really do. But it also doesn't mean that I can't take advantage of the drawdowns in typical bear markets. When you say you risk X percentage of your portfolio, what does that mean? X amount of my capital. So let's say that for argument's sake, just as an example, let's say that I have a $1 million crypto trading portfolio. Risking 1% would be risking 10K. Which means Sorry, I got distracted. Which means that I would stand to lose $10,000 on a trade if I'm risking 1%. Now, on my higher conviction swing shorts, I usually risk between 3 and 5%. I know some people will freak out at that amount, but that's how at least I trade this market. Exactly. It would be foolish. Like imagine if all I did was short and I have no exposure to crypto. Look, if you don't believe in the asset class, then maybe that's okay. But for me, I do really believe in Bitcoin's future. I do feel like it will fulfill its purpose. I've been around the block for quite some time trading the market, although I only recently started the YouTube channel. So yeah, I mean, I'm just comfy in my position. Legends, right before FOMC, let's destroy that like button. We're already at 250 likes. Can we get to 500 likes in this live stream? We've been streaming for just under 1 hour, Legends. Absolutely destroy that like button. Smash it, baby. Let's see if I can sort something out here. I'm sure there's a better way to do this. Delete this. Awesome. I'm glad that there are ladies here as well. I know that the crypto community is, usually just males, but I am very trading. Ugh. We got our little Bitcoin corner here. I'm not going to call you guys that. Do we do the 1 minute chart? Is 5 minutes not exciting enough? We do the 1 minute chart. Let's do it. Maybe I move this a little bit more. Oh yeah, it is 30 minutes away. So silly. Getting excited for no reason. Thanks for letting me know, Legends. Silly. All right. While we wait for that, let's take a look at the liquidity. 1 week time frame. What do you notice? We do have a lot of longs that piled in. A lot of longs. So let's see. Don't get me wrong, there are some shorts, of course. But I'm very happy with having this kind of exposure that I have right now. I added to my short. I've been holding short from higher. Now we see how the price action develops. But this is a good level to hold as support. It really is. So value area high. The rate will likely stay exactly the same. Legends, the probability, look, 98. So silly. All right. Again, it is a nothing burger. I mean, look, I'm not sure what else everyone was expecting, but we have the economic projections coming out, and then the Fed press conference, which is in half an hour. So this is what we'll be watching. We'll be watching our friend Jerome Powell to see what actually comes out of this. But I feel like he's just going to be echoing the exact same thing. I mean, he hasn't really changed his stance that much. So yeah, I mean, another nothing burger. And Bitcoin is, I mean, reacting. Structurally, this is the thing. A lot of people try to place a lot of importance to these kinds of events. Unless there's some kind of shocker, then really, this is a logical level for Bitcoin to bounce. So if you look at the charts, this is the value area high, and it makes sense after getting such a strong move up that we could bounce from around this zone. There's no reason to believe that that couldn't be the case. But I'll have the other chart up as we watch Fed Chair Jerome Powell give his little spiel. Thank you. I appreciate your support. I'm glad that I can provide you the value that you're looking for. Fill the CME gap, and we're off to the races. Yeah, I did leave before the heat. So now, like, I mean, there's not really much for me to say. If you wanted to play this reclaim, that was a good area to go for a potential long, sweeping the value area high of the existing range. And then what you typically do, or what I typically do when it comes to these SFP entries, you know, stops right below the local low. And then as I get favorable price action, I move my stop to break even. This way I risk losing no capital. Because if we do start taking off here, it's likely not going to be like a bunch of retests from this zone, in my opinion, of course. But I like zooming out. This is the 4-hour candle. Doesn't look too shabby, does it? Let the federal fund rate steady target range for a second consecutive meeting in line with expectations as it navigates a challenging environment marked by the risk of an oil shock, persistent inflation, and signs of a softening labor market. So this is also the issue with stagflation. Like, you know, if the labor market is softening and we have persistent inflation, which we did see today as well, we did get inflation higher than expected. It essentially means that the Fed's job becomes very, very tricky. And it's not the kind of environment where risk assets can really thrive, in my opinion, which also adds to my conviction in my shorts. So we'll do the press conference, and then I have to leave. Legends, remember all of the trades that you see here, you can see before I come on my live stream, before I go on the YouTube channel. First link in the description down below. You DM me the keyword CBM on Telegram to join my private group. I'd be more than happy to onboard you. The only requirement is that you've signed up with one of the affiliate exchange links down below and you start trading on there as you'd normally do with your capital on any exchange. So if that sounds interesting and you want to see how I am trading the market, it's free. Just DM me CBM on Telegram. And no issues if you don't want to join as well. I'm out. Thanks, Matt. Oh, you got to stay for the press conference, man. Got to see what Fed Chair Jerome Powell is saying. But my pleasure. Thank you for tuning in. We're going to cover what Powell is saying. How are we doing on likes? 300. Legends, let's get to 400. 500 likes. I think it's feasible. And I don't see why we can't achieve that. There's 17,000 of you subscribed to the channel. Destroy that like button. Exactly. The volatility comes when Powell is yapping. So let's see. Where do you see the CME gap? So if you want to look at the CME gap, you have to essentially search this up on TradingView. BTC1 exclamation point. And you'll see the CME group here. Basically, the gap is shown on the chart. So you have to identify this, and the gap has indeed been filled. Bluffin is indeed no KYC. I believe, I mean, it depends where you're from, but for the most part, it's no KYC. I mean, I've held also for a while, but yeah, they do offer that option. There is a huge CME gap. Where is this huge gap? I think you said 67? Are you sure? Legends, when a gap, I mean, I could be wrong here, but if this is the gap you're referring to, it's been filled already. Or am I tripping? Maybe you're looking at something different? Neil, I don't have a Discord, man. And I sometimes share my updates in the group, like on my videos, but basically it's not a group where I'm telling you guys what to do. It's a group where I'm sharing what I am personally doing. So what you can expect in my Telegram is basically, and it's free, as I said, it's just my own voice messages, my analysis, what trades I'm personally taking, how I'm navigating in the market from a spot portfolio perspective as well, not only trading, although I haven't really talked about spot because nothing has changed from that perspective, but it's just my own insights as to how the market is developing and what I am doing to take advantage of it. And again, the only requirement is that you've signed up with one of my affiliate exchange links, whether that's Bluffin, whether that's Weeks, Velto, BTCC, and you start trading on there, make it your go-to exchange, and yeah, you trade with your own capital. So it's not a paid group. 15 minutes. All right, the real PG. Let's go, man. I'm not sure, JS Squiggle, I'm not sure if any of these work for you down below. But we have some solid options. One thing that's interesting is that on this move down, finally, people have started to pile into shorts. And so I think that this could be a tricky area right now where maybe, just maybe, we grab some of this upside liquidity when Powell's speaking, and then we come back down. I'm holding for swing trades, of course. But it's something that we can't ignore. Exactly. The last 6 times we dumped after FOMC. So let's see, guys. Let's see. The probabilities aren't favoring a massive pump of any kind. But we'll see what happens with Jerome Powell. What type of music do you have in the background, like now when you work? I am someone that believes in not having any music and just focusing on what's right in front of me. So at most, I'll do classical music, but a lot of the times, literally just rock. I could never, for example, have music with lyrics as I'm working or as I'm trading the market, simply because it's not an environment that is good for focused work. You start singing along, you get distracted. It's just not good for your brain, in my opinion. And this music, sorry to not fully answer your question, this music is essentially just background music, no copyright playlist on YouTube that I found. And I changed it from my last live stream because someone was complaining that I was playing the same thing over and over again. How do you pronounce your name? My name is Matsur. Macias in Spanish. Yes, sir. Powell gonna deliver his knockout punch today. Let's see, legends. Let's see. We got another valid J Tinnen. You can use Weeks as well. Weeks is a very, very solid platform. If you want to use it, you get 25% off all of your trading fees if you sign up with my link in the description down below. I have capital on Weeks as well. I like using them. No, I didn't start calling you legends because of, I don't even know who Mega Whale is. I have to be honest, I hardly follow anyone in the crypto industry because I do think that there's so much noise in the space. And if you've been following me for a while, you know I'm going to repeat myself here, but I think it's very important that you're selective about who you listen to in the space, because there's a lot of people that will likely lead you astray. So it doesn't have to be me, but pick 3 to 5 people in the space that you value their opinions. They have a good track record. They trade the market. Some people don't necessarily trade it, but they're pretty spot on with their analysis. And just stick to those people and then see if it matches with your own analysis. And that's how you can actually navigate the market and sleep well at night. Because if you start scrolling through X and you look at all of these engagement bait pieces of content, you're bound to get screwed, because it just, when I first started trading crypto almost a decade ago now, I would get influenced by things I saw on social media, and not news related, but like other influencers would be bullish when I would be in a short trade, for example, and I would start freaking out and then I would close my position. So call us Chives. Yo, bro, thanks again for the hype trade. I know you said to close, but I couldn't help myself and held for a 200% gain. Absolutely epic. That's crazy, man. Crazy. Hype is looking beautiful. Zane, you can comment, my boy. I can see you. "10 minutes until FOMC." Sorry. I should say the FOMC press conference. The Fed press conference. 339 likes. Legends, 160 likes remaining. Smash it. Let's get to 500. We have to get to 500, legend. Call us Chives. It's funny. How did you accumulate capital for trading when starting a decade ago? That's a very good question. And I think I addressed it in my previous live stream, but really what I did was work. I had a little agency on the side, and I worked a job to essentially accumulate as much capital as possible for trading. It's probably not a flashy answer, the flashy answer that you're looking for, but it's just the reality of things. If you're new to trading and you think that you can just start trading immediately and just become this crazy profitable guy, and you're not relying on anything else for your income, that's not, trust me, you'll want to be careful with that, because there's a whole new pressure added to trading when it's the only thing that you rely on to be able to live day to day. That's why I think it makes sense to have a job, have a business, and start gradually trading as capital is still coming in. This way, if you make a mistake and you lose capital trading, because there will be losses along the way, you're not devastated. Your life isn't over. If you just quit everything and just start trading, like let's say you even have like 50 grand, 20 grand, you quit everything and you start trading, it's not a good idea in my opinion. You have to have proven success before quitting, in my opinion. That's what I did, at least. I'll do a poll. Let's do it. After pause. Speech. I just told my boss I'm a legend and don't tell me what to do. Absolute legend. 5 minutes. 5 minutes until the press conference begins. Then I'll turn off the music, and please let me know as soon as I start if the sound will be good enough for you, and we'll watch it together. I'll probably be pretty quiet. Yeah, hype is looking great. $11,000 people have nothing better to do with their time than watch the FOMC press conference. That includes me. That includes you, legends. Let's watch it together and see how it impacts the market. The interest rate decision, I mean, this is nothing burger. Fully expected that it remained exactly the same. 3.75, no cuts. Legends, what is this? This doesn't give me confidence in my shorts. Why is everyone bearish? Why is everyone bearish? Maybe I should be longing. What on earth is going on here? This is crazy. You guys know I'm a contrarian trader, but when people are starting to target lower, I get worried. I get worried. I'm in my short, don't get me wrong. Happy with my shorts. But the consensus is very rarely correct. That's what I've noticed, especially trading bear market price action. However, I will say that maybe you guys are just in line with what I think could be happening next. And so because of this, you voted for 65K. That's fair. The rejection from 76K was nasty, hence everyone expecting dump. Fair, fair. It's a bit of reverse psychology. I want to see the 75K become, exceeding the 65K, and then this time is different. We're legends, not dipshits. I believe we reach 80K. Let's see. Let's see. Let's see. 2 minutes. 370 likes, legends. FOMC thumbnail, Matt looks different. Yeah, so this is the thing with these thumbnails. I use a tool that helps me with like AI, and I've been really like playing around with them, but it's so hard to actually make it seem like you. Like sometimes my forehead looks huge, sometimes I look fat. Like it's very difficult to get a super accurate thumbnail of yourself with these AI tools, but I try my best. All right. Music is off.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course.
Uncertainty.
We make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Now let's hear the questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise.
Still talking about tariffs.
To sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the SEP, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially, it is that the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that.
Still talking about tariffs, man.
The rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
The consumer is going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction that to your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. Now, it'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down, and we don't debate how long. How do you do that? We wouldn't be able to debate what the overshoot is, mainly from the goods and tariffs, and the labor market is the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs, with little growth in either demand or supply. But the U.S. economy is doing, pretty well. It's just we don't know what the effects of this will be, and really no one does.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is, there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
Yeah.
About
So there'd be an offset.
Offsets, yeah.
So that's true. We have, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rate rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But
Waiting for the head and shoulders to play out.
The oil shock will still be
on the 1 minute time frame.
Pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that, having looked through tariff inflation and inflation running above target, and looking through the oil price shock, would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%. And I think it's important that we do that. Very important.
Nick.
Nick Timmeros, Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say that the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not.
Dump it.
That a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent. To the extent those prices the tariffs are paid by consumers.
Big fat nothing burger.
On a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system. And we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system so that goods inflation will return closer to what it's always been. I mean, it used to be, for many, many years, it was negative. And then, the year before tariffs came in, it was 0. And it's running at like 2% now. So, and so that's kind of, goods inflation is running at 2%. So that's not coming from standard Phillips, where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates, or not cutting anyway.
Stagflation.
We feel like our framework calls on us to balance the risks, and we feel like where we are now is just kind of on that borderline, the higher borderline of restrictive versus not restrictive. We feel like that's the right place to be.
Can I ask about core non-housing services, though? because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Labor, non-housing services they basically moved sideways for a year. They're at the same level. And we do expect that they will come down, but it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing.
Boring.
But we're not seeing progress there. So we do, what we expect for next year is continued, what we want to see for this year rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chappelle. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core. Inflation 2.8% headline, so we've been well above the 2%, that amount, whatever it is.
Dump it. Dump it.
A full percentage point above 2% for some time, and that's a concern. We need to get back down to 2%, and we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet. And I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
It's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right.
Powell's getting investigated, if you didn't already know.
See the kinds of
Trump set it in motion.
Expect to see due to tariffs that I mentioned. I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story to a large part being a supply side story has changed, despite the quite negative number in February.
Dump it, baby.
The right take, and was there anyone else in the room who thought differently in that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability. But the thing that I think a good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcapacity, effectively there's zero net job creation.
Dump it.
But actually that looks like that's about what the economy needs in terms of dealing with.
It's funny because we're looking at the 1 minute time frame, and I'm literally a swing trader.
Of course, we've never had in our history. So
but I know that this isn't entertaining for some of you. 71K?
Limit growth equilibrium.
Woof.
Now that's balanced.
Send it lower.
But I would say
I'm shorting if it wasn't already clear.
Downside risk, and it's not kind of a really comfortable balance. So. We look at that, we see it, we get it, and I mean everybody understands
the head and shoulders is playing out on the 1 minute time frame.
Zero, but
crazy price action.
It's something we're watching carefully, and so we're concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless, something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
We did go through a long period where the shocks were all demand shocks, and so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. Broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we did. And I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television.
Rather that our next move might be an increase to come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But but you correctly characterized, what was in the minutes that several participants indicated something very much like that conversation did happen. What was your second question then?
Oh, that was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether if this becomes an inflation problem beyond just oil?
Pretty nice to see that
About it, or would do about it, given
Bitcoin is dumping.
the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing, that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long, the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service and business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid.
Absolutely, the dump is normal.
Inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a.
I'll keep playing him in the background.
I think everyone does.
But the short is looking good, Legends.
Those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of when inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in
Mo Trades,
productivity.
I would recommend that you actually make it your main account.
But sorry, your second question was.
I'm reading the comments here, because if you just deposit the minimum and then you don't actively trade, you get removed from the group.
Stagflation scenario.
Yeah, so as I mentioned, there is tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. When we use the term stagflation, I always have to point out that was a 1970s term.
Will Anderson, I could see your comment, bro.
Figures, and inflation was really high, and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the
No
goals.
stagflation.
We're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth.
Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that. I
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Crucial support on the 5-minute time frame.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves. With what happens in the Middle East, that's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios.
In other words, Jerome Powell is saying what I've been saying.
It's very uncertain.
He doesn't have a crystal ball.
Just remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen.
I'm a scalper now.
A really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Yeah, it's always the same with Jerome Powell. Not much has changed.
Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year. They should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that.
Will Anderson, Canada is nice. Right. It's a bit cold though.
But as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. And
I live in Dubai, but I am currently visiting Canada.
How long it will take for tariffs to go all the way through the economy. And so what we've been doing is, our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history. And then they built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc. And for all the tariffs, they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases.
Oh, Canada.
We should start seeing that more and more in the middle parts of the year. We do expect that. Now you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Hi, thank you. Chris Ruge, Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So it never locks people in. People are more than happy to be proven wrong in either direction, and so I just think we do it. And this was
Tanish, I'm holding my swing short for much lower.
Took one meeting off, I think.
I entered at around 97K. I added to my position at 74.5.
I just would say for this one,
and I ultimately think that Bitcoin will be going sub 60 at some point.
Even more than usual, good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Brian.
Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world, by the way. Everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet, and it will take some years of positive real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up.
All right, legends, I'm going to stop it there. I just wanted to give you a quick update on the charts, what we're seeing right here before I wrap up the live stream, because it's crucial to let you go with this. So to summarize, basically a nothing burger. There are going to be some growing concerns about stagflation, although we're not quite there yet from Jerome Powell's perspective. Now, from a shorting perspective, I shorted Bitcoin at 97K. I added to my existing position at 74.5K, right at these tariff capitulation lows, which I highlighted time and time again. I was very, very patient for this level. Ultimately, I do think that Bitcoin has a high probability of moving lower. I don't think that 60K was the bear market bottom. That's just my opinion, of course. Right now, we're currently at the value area high, but we are losing it. If we can't reclaim this level, then it is highly likely that Bitcoin will find its way back below $70,000. And then we're going to start talking about this point of control. So let's see how the price action develops. I'm happy in my shorts. Remember, legends, if you want access to all of my own personal trades, how am I trading this market on a day-by-day, week-by-week basis, you do have the first link in my description down below. If you DM me the keyword CBM on Telegram, you're able to join my private group. This is where I share all of my own personal trades, and there's not much else to cover. I mean, same nothing burger, interest rates stayed the same. I got to jump out of the live stream right now. I hope you enjoyed the content. Thank you for tuning in, and I'll see you in the next video.